Uh, yes, we're on. Good morning. Good morning. Nice way to start the day. Morning, everyone. How are we all? First of all, I am Chris Lowe from Bloomberg. So, it's on? Yeah. I'm the TMT specialist. I've been covering everything global, basically. We have worked with Stan from Hub Culture for a number of years in helping promote a number of his ventures, including Venn and several other of your amazing enterprises. So thank you, Stan. I just wanted to sort of welcome everyone, both the presenters and also the investors and other parties in the audience. I think we've got a fascinating day ahead. I hope you can stay for as long as possible, and I think one of the things Stan and I would really love is for this day to be as interactive as possible. I'm not going to speak for too long because lots of introductions really are not really our ticket at Bloomberg, and also I don't want to take any of the great credit that Stan has really deserves for all the great work that he's done in putting together for today. But hope to meet you all over the course of the day. And as I said, let's try and make this as interactive and as successful as possible. And thank you for your time and support. And over to you, Stan.
Thanks. Hi. How's everybody doing today? Can you guys all hear me, or do I need the mic? Can you hear me? So first of all, a big thank you to Bloomberg for having us here today. Chris and I have been working on various aspects of liquidity for quite a while, and we have finally found the right date and the right opportunity to get into this amazing location. We have had a lot of adventures together with Bloomberg over the last couple of years. Bloomberg did a really amazing digital currency summit in New York last summer that we were at. And we did a kind of roadshow around Silicon Valley in the fall, talking to investors and other groups in Silicon Valley about the kind of global view on investment. But we were participating from a Venn side, which was quite interesting because we were actually looking at how Venn could be used to buy stakes in public companies in places like Silicon Valley. So we've had some really great adventures over the last couple of years. And I think that the future is really bright, not just for Bloomberg and Venn and for the really well-known digital currencies like Bitcoin and projects like Ethereum that are coming down the pipe, but for everybody that's actually in finance. This is a really exciting time to be in fintech and to be looking at how we can rebuild some of the very base societal infrastructure that governs the way that we approach money. And so that's really what we're excited about, and I think it's what everybody who's going to be speaking today is at least interested in. We have a wide variety of perspectives. This is not a digital currency summit per se, but it's really a summit on new finance. It's the third time that Hub Culture has hosted this, and we also do a series of small dinners around the world kind of under the liquidity theme as well. And over the years, these discussions have looked at everything from peer-to-peer finance to lending, to the role of VC and venture capital, to infrastructure, like today we're going to be talking about rails. And you may say, what are rails? But rails are basically the kind of back-end infrastructure that govern how we make transactions in the financial system. So this isn't just about the kinds of things that we're really excited about with Venn, which is really digital currency, but really a whole look at finance. So we hope that you'll really enjoy it and have a chance to learn something today. So I'd like to start with just a little bit about who we are. And I'm going to spend a few minutes to give you an overview of Venn, because some of you may not know very much about Venn. And today we're making a number of, we think, exciting announcements about the future of Venn, with a kind of 12-month outlook about where the currency is growing and the kind of growth that we're experiencing with that. But first, you should understand a little bit about Hub. And Hub is really one of the first social networks. It was founded back in 2002. And we have grown in a very unique way. It's always been about live experience, live interaction, live moments like this, where we pull people together. And we tend to do that at places that we operate called Hub Pavilions. And so we're going to run a little 30-second video that'll just give you a taste of some of the pavilions that have appeared around the world. Some of them are permanent, most of them are pop-ups, so they come and go depending on the moment. Thanks, Josh. So for everybody, the most important guy in the room tonight is actually Josh, who's in the back, who's helping us with all this amazing AV. Thank you, Josh. So that's a little taste of hubs. We've done 25 of them around the world. Our biggest, kind of, for me, most exciting hub is always at Davos, which we do in January during the time of the World Economic Forum. And we've really become, I think, part of the community there, and we get to meet and interact with a lot of amazing people at that hub. But we have everything from a beach house in Rio to a seasonal project that we do in Ibiza. We're working on a project in LA that's going to be opening this spring that Nobu is actually anchoring for a ground floor restaurant. And we just kind of create them all around the world. But what's really exciting from a fintech standpoint is the digital currency. So Ven was founded back in 2007 as a way for us to be more efficient within the community by providing a means of exchange for our 30,000 members around the world. So the idea was that you could actually buy the digital currency online, go to a hub and spend that for a tea or a coffee or a membership or eventually a car or a diamond or financial assets. And that's really how it started. But this happened back in 2007, which was what I think of as BB, which is like before Bitcoin. So in 2009, we all know that Bitcoin emerged as this protocol. And it really has taken the world of digital currency and elevated it to an entirely new level. And so we found ourselves kind of being introduced to this like radically interesting new community of people who were really about disrupting finance from its very root, and that is with the protocol of money and creating what we think of as an internet of value with the Bitcoin protocol. So the big difference between Ven and Bitcoin as currencies are that they're almost entirely opposite from each other. But the cool thing about that, it means that they actually are quite complementary. They actually go relatively well together. I like to think of them as peanut butter and jelly. So Bitcoin is decentralized. It's a protocol. There's no single company that controls it. And as we all know, it's worth about $5.5 billion in terms of market cap today. Ven, especially because it's run by a company, has limitations that make it a little bit different. So it runs on a centralized ledger. It's a rules-based algorithmic currency. And quite crucially, it's asset-backed. So this means that there's a set of assets, currencies and commodities and other things, but really carbon, about 6 commodities and about a dozen currencies. And they all get crunched together into this algorithm, and it spits out a price. And we get that price, and the markets get that price, so we know how much a Ven is worth. And then we issue Ven based on that price into the markets. And we take those underlying assets, the dollars and the euros that people spend, and we diversify that into those underlying assets. So it creates what we call an asset-backed currency. And we did this because when we launched a currency, it seemed like a really crazy thing. And the only way that we thought that we could actually create stable value was to fully back the currency. So there are reserves with banks that hold those assets, and we hold that for redemption when a Ven runs through the economy. But let's take a quick look now at the overall industry, and then I'll go into a bit more about our strategy with Ven. So this is from blockchain. Nick Carey is going to be on later this morning talking about the really exciting things that are happening with blockchain and the Bitcoin protocol at large. But this gives you an idea of the market size of the biggest digital currencies in the world. And obviously you can see that Bitcoin is down a little bit. It's at around 3 billion right now because the price has dropped. The price of the market cap obviously goes up and down with the value or the price of the currency at any given moment. Ripple is at number 2. This is a very different type of protocol. It's really the only other decentralized protocol that exists that's fully in operation today that has like a large market cap. Litecoin and Dash are both what we call forks of Bitcoin. So they took the core open source technology from Bitcoin and they tweaked it and they created some different parameters for it, and they're able to launch their own currencies. Dash is really interesting because it's actually a rebrand. Up until very recently, like 2 weeks ago, Dash was known as Darkcoin. And Darkcoin was a crypto wallet which was built to be anonymized because some of the programmers and hackers who were working on Bitcoin Core felt that the changes that had been happening in Bitcoin were threatening anonymity. So Dash is the dark side of Bitcoin as a new coin and focused on anonymity. And then Stellar is quite interesting. This is the first fork of Ripple. So basically, again, Ripple is open source technology. And you take that technology, you adapt it, and you change it. And Jed McCaleb, who is one of the founders of Ripple, basically went off on his own and started Stellar. And they've got a pretty good market cap. They've actually been growing very rapidly for the period of time that they've been in operation. And these are really the 5 major players right now in the digital currency space. But underneath that is a plethora of over 4,000 other coins and currencies that have been launched, mostly off of the Bitcoin protocol. So, I mean, there's Kanye coin and there's any kind of coin you can imagine these days. But these are really the kind of serious players, I think, the ones that are worthy of attention and worthy to, say, at least be following on Twitter. Now, over here you see Ven, and Ven is, again, very different because it runs on a centralized ledger, so there's no public view via a blockchain of the transactions that are happening in the Ven economy. And this is something that we're actually working on. We're building a project called the OAI, the Open Audit Initiative, to build our own blockchain that would run off of Bitcoin, that would publish some of these, or actually publish all of the transactions and give us a clear view of market cap. But because of the way Ven is organized, this runs on a centralized ledger with exchanges and with ourselves. And I'll show you a bit more about that in a second. Our total volume exchanged is $50 million. That's, again, a little bit different from a market cap, but it's the best comparison we have of the two, because really what we're looking at is overall transactions within our economy and on those exchanges. So this is just a quick look at Ven.vc, which is our mobile application for Ven. Because Ven is part of Hub Culture, it's always lived within the community, and there are 9 applications within Hub operating those locations, collaboration skills, there's an online retail store. These are all like what the community does, but we've recently popped Ven out to give it its own front end so that people can easily access Ven and not worry so much about the rest of the social network. But what's really important with that is that as the regulators and the government starts to take these assets seriously, some aspect of identity becomes very, very important for how these transactions are monitored or how they're approved. And so we've actually found ourselves coming full circle back to the social network, because we have an incredible identity matrix that's built in with the currency that comes from Hub Culture. So Hub ID, our new identity product, actually authenticates a Ven. So whether you're accessing Ven from an exchange or from Hub Culture or from Ven.vc, you're still using that same identity. There are really 4 major attributes of Ven that we think are pretty cool. And again, they're very different in some ways from what's going on with Bitcoin. So first of all, Ven is extremely stable. It's actually the most stable asset currency in the world. Over the last 7 years, it's proved to be about 50% less volatile than the dollar or the euro, let alone a digital currency. And the reason is diversification, right? There's all these things that make up the value of a Ven. Those things tend to even each other out, and over time, the Ven moves less in the markets than a single asset would. It's secure. We use algorithmic cryptographic security to both approve a transaction and to basically secure the network. But beyond that, there's really just one ledger, so there's no danger of a fork or another kind of duplication, because there's no mining associated with Ven. There is a centralized ledger. Now, the danger of that, of course, is that a centralized point of failure, as the Bitcoin community likes to think of centralized currencies, is something that could be hacked or potentially compromised in some way. But on the other side, we have the ability to reverse and see a transaction or spot a difficulty, and to be able to reverse that, because, again, we have control of that entire ledger. So at a meta level, every transaction that runs through the network is basically traceable and viewable via Hub Culture, and something that we could basically use as a compliance point when it comes to regulatory clearances, which is really a very, very important area. It's obviously global. You can send a Ven to anyone instantly at 0 cost. You can send a penny to Tokyo right now, or you could send $100,000 to Cape Town in really the same amount of time. Instant, direct clearance. And then finally, it's green. So the really cool thing that I love about Ven is that it's backed partially by carbon. 7% of the value of Ven is carbon linked. And this attribute makes it really cool, because as the float grows of the underlying assets, so do our investments in carbon. So just to give you a little overview, since 2007, we've moved $500 million Ven. And looking ahead, where our target for exchange this year is to trade 2 billion Ven in the markets. And this is really largely due to the fact that Venn has recently moved into the financial markets. We're on two exchanges. One is a digital currency exchange called Kraken out of San Francisco, and the other is LMAX, which is a Forex exchange here in London. When you take up the long tail of users within the hub culture community who don't spend or trade very much, and you combine that with the institutional traders that are buying and trading Venn in the markets, you actually get some pretty amazing numbers from a social network standpoint. So an average social network would probably have an average revenue turnover of around 30 cents, if they're even lucky, a year per member. Our average turnover per member is $16,000 US. And the reason, obviously, is that there's a very big disparity between people who are trading larger volumes and people who are trading very little or nothing. But as an average total revenue, or sorry, total volume transaction per user, it's exceptionally high. I think it's probably the highest in the world. So here's an idea of growth from 2013 to 2014. So the key thing that's driven our growth has been the move to authorities, which is basically to say, we're like a central bank, and we're authorizing banks and financial entities to be able to use Venn. And the reason for that is because they're regulated. They have regulatory clearances, and they're able to do things that we can't do until we spend, say, millions of dollars working on getting those regulatory clearances. And we don't cash Venn out to fiat currencies, say dollars or euros ourselves. We work with regulated partners who actually do that through the exchanges. So in 2013, when we were just starting this, we had done a very small amount of Venn, but still large by our standards of, say, 3 to 4 million US dollars traded. Now, that's actually grown quite a lot. And most of that's actually happening with the authorities and with the exchanges. So just to give you an idea, in the 6 years up until 2013, we did 30 to 40 million Venn. In the 12 months since we launched the authorities program and began entering exchanges, we've gone to 500 million Venn. And then that's obviously where we're seeing the growth. So as we enter more exchanges and as our exchange trading volume on existing exchanges grows, we're going to see a lot more growth for the currency. The odd thing is we don't really make anything on it because we're also holding those underlying reserves. So there's a very small like basis point or a couple basis points that get traded on a particular trade. But from a volume standpoint, it's pretty awesome. A couple of announcements that I'd like to share with you, and then we're going to move into our first panel. One is that we're working with some organizations, the Gates Foundation that we're talking to, and the ICRC and others, to create humanitarian trials for peer-to-peer distribution of value. And the first locations are Turkey, Syria, Rwanda, and South Africa. So for the Turkey-Syria project, we're actually starting a pilot trial with 500 refugees in Adana, which is just over the Syrian border from into Turkey. And it's a place where a lot of refugees, there are 3 million refugees that have gone there in the last 2 years. And the goal is to actually create a Venn budget to deliver Venn to these refugees. Believe it or not, 60% of them actually have a phone with some level of access to the internet. And in addition to giving people this Venn and giving a little access to capital opportunity to these people, we're working with local partners there who are going to create things that people can basically buy with that Venn to basically help them in that situation. We're doing it also in Rwanda and South Africa with little trials where we're looking at getting Venn into the hands of basically people who are unbanked. I saw an amazing number from the World Bank yesterday that said that in the last 36 months, 700 million people who were previously unbanked have joined the banking system. This idea that the world is unbanked or that a large swaths of the world are unbanked is disappearing right before our eyes. I mean, if we can add nearly 1 billion people in 3 years, I think in the next 4 to 5 years, we're going to really take that next leap to get the 60% of the planet that's actually unbanked into the banking system. But the key is that almost all of those people have joined because of phones and particularly SMS transactions and SMS technology. So the big thing that we're working on now from a technology capability is that Venn would be exchangeable over the web, as always, but also not over the web via SMS. And we have a partner that we signed a deal with in January that's currently building that technology for us and planning to roll that out soon. The other cool thing is that if you're a hubculture.com member, starting this fall, you'll be able to get a credit card or a debit card that is Visa or MasterCard linked to your Venn balance. This will allow you to spend your Venn anywhere you go at any store that you want, but linked through the cloud to Venn. And this is pretty exciting. We're doing it with a company called PixPay, which did something like 2 billion payment processor transactions last year, and is a real leader in, again, SMS technology and just kind of general innovation. So Pix is doing some really cool stuff, and they have the ability to roll out those debit cards and credit cards on our behalf, and we're working right now to link the back end of their credit card system to our account wallets. So in this way, you kind of think of Venn and Hub Culture acting a little bit like an issuing bank. And what would happen is your local currency, a transaction in pounds, would transact through the cloud and get translated into Venn, check if you have enough value in your account, and then kind of go back down the other way to the local currency. So this will enable real-time local currency transactions, but your account is held in Venn. I like to think of Hub a little bit like a virtual country. So we have real estate, we have kind of these borders that people enter and exit, we have a currency, and we have identity, sort of our digital passport. So that digital passport plus a card, I think will be pretty cool. The other interesting thing, we've been investing in carbon and carbon credits as part of the backings of Venn. And we're now taking the next step, something that we've been really wanting to do, to look at asset purchases, particularly of forest and land, that can actually kick off positive amounts of carbon credits into the future and become what we call a permanent asset within the asset base of Venn. So the first properties that we're looking at are basically really remote forest areas in California and Alaska, hoping to basically buy some of that land and start banking it and creating permanent land banks for nature, which is really neat because as those forests are protected and preserved, they'll also kick off positive amounts of carbon credits that we can then buy and put into the basket that's backing Venn. We're hoping to have the first acquisition done by the end of the year. This is a little look at something that isn't a watch. So this is not like our answer to the iWatch because it's a lot dumber than an iWatch, but it's probably not even going to exist on a band, although this is the mock-up. This is what we call the Voin or the Venn coin. And what it does is it uses Bluetooth technology to connect to your smartphone to pull Venn onto a little coin. And then this coin can then connect with a Clover or a Square POS to enable a value transaction to take place at point of sale. So it's pretty cool because what it really does is also identify you and take fingerprints. So one of the things that we're doing with Hub ID is what we think is the world's best approach to KYC and AML through identity. And our approach is to make sure that people own their own identity. So that little coin will actually be able to take a fingerprint and upload that to the cloud to become another biometric verification point for your identity. But what's really interesting about this is that our view is that you should own your own identity. There's no social network in the world that allows you to own your own data and to monetize your own data. They're selling everything about us, and that's how they run billion-dollar advertising models. And that's a great thing, and it's really appropriate for some circumstances, but not for every circumstance. So as a social network, we're really committed to giving individuals ownership of the data and the ability to actually trade that data in ways that they see fit. And so as Hub ID grows, what it does is it takes the data points and it translates it into a color tab, and that color tab then populates your profile and your identity, and it becomes a long hash string. You'll be able to write that hash string to the blockchain so that you have a permanent identity on the blockchain related to, obviously, the Bitcoin blockchain. But you can also then trade it and monetize it with Venn related to how banks or other entities are accessing your data. So this is now really in operation, the first phase of it. And if you have a Hub Culture account, you have a Hub ID. This is news. So this is a new project that we've been working on for a little while, and this is the first time that we're publicly announcing it. There's been a lot of talk about infrastructure and rails and thinking about how we can lower the cost of large-scale financial transactions between institutional players. So how does Goldman move money to JP Morgan, move money to BNY Mellon? And typically the rails that have been used have actually worked very well, and they're actually very low cost. But blockchain technologies are giving us new ways to approach the way that we approach rails and the way that we can look at something called settlement for currency, not just digital currency, but physical currencies like the dollar or the euro. So VenLoop is our new project that we're announcing today. And VenLoop is basically a club. It's a network for institutional investors, hedge funds, and banks to be able to trade value between each other. So what it does is it gives an institutional level account to these kind of authorities, and it allows them to trade large volumes of VEN directly between each other, and then to settle that into local currency at the end. So it gets a little bit complicated, but instead of taking a bunch of SWIFT transfers or IBAN transfers and paying for each single transaction, and instead of having market makers on either end, which are clearing the transaction, this actually allows you to do the majority of your transactions in a closed loop environment that we run end to end. So the transaction cost is zero, and you only have to settle into the local currency when you sweep at the end of the day. So we think this is actually pretty cool because it's really a new way to do direct transactions at the institutional level. It's going to be rolling out throughout the rest of this year, and we're signing up the first partners to the program now. So I guess there is one more thing. The other neat thing is that we've launched a racing division for VEN to look at sports sponsorships, and we're also looking at music. So our big project that we're working on right now is Bermuda for the America's Cup. We actually have a 4-year program in place to try to build a team funded with digital currency. That's about a $100 million ask. So if any of you have a spare $100 million that you'd like to turn into 1 billion VEN to turn into an America's Cup team, please come and talk to me after. But the second phase for this is, before we get to a team, to do a sports innovation and oceanographic research hub in Bermuda that will be tied to the America's Cup in 2017. Of course, it will be completely connected to VEN, but it's also part of our racing sponsorship capability with regard to the world of sailing. So we're really looking at America's Cup as being the sport for VEN, and we're also looking at sailing and rally as the kind of supporting supports in that area as well. So doing some VEN-denominated sports sponsorships. And then in this summer, the UN is doing the UN Climate Summit. We've been very active at UN summits all around the world with regard to climate, going back to 2009 with one of our hubs in Copenhagen. So Live Earth is coming back with Pharrell and Al Gore, and they'll be doing concerts in New York and Paris in June. So we're working with Live Earth to look at fundraising mechanisms for the environment through VEN, and hopefully ticket sales through Live Nation related to Live Earth that will be VEN denominated. So that's kind of a look at us and a view forward for Hub Culture. But I promise today isn't about us. It's actually about the industry and the amazing companies that are doing great work across digital assets. So I'd love to bring Edie Lush, our executive editor, up. Edie has been working with us for 6 or 7 years now, and she's really the face of Hub Culture, a much better looking face. And I'm going to go to a video now from Edie. Edie, come on up. And let's go to Josh with the video. This is Edie in Davos at the Hub in Davos, interviewing Susan Athey from Stanford about the potential of blockchain technology. We're going to go from that into the first panel session. Yeah, you have.
The anticipation.
Do I need to click?
Or we could just re-act the interview.
The interview?
Yeah,
Say,
we
wait,
can
say,
pretend.
hi, I'm Edie Lush at the Hub Culture Pavilion in Davos.
Hi, it's great to be here.
So I guess while we're waiting for that, does anybody have a question? Guess not.
I'm here at the Hub Culture Pavilion in Davos. It's starting to snow here. I'm very pleased to be joined by Susan Athey, economist at Stanford Business School, top American economist under 40. We're here to talk a little bit about digital currencies. Tell me, first of all, tell me about Bitcoin, what your thoughts about it are.
Sure. Well, Bitcoin is a really exciting technology innovation. It's a new currency, and that sometimes distracts people. Economists never really want you to have a new currency because you're worried about exchange rate risk. You're worried that you don't know how much that Bitcoin is going to be worth tomorrow. But what's so special about it is that it exists in a purely digital form. We haven't figured out how I can beam a dollar from me to you, but the definition of having a Bitcoin the whole definition is that it's in the spreadsheet. And so what that means is I can move it instantly, I can move it around the world, I can move it to whoever I want without using any kind of middleman, intermediary, or bank.
How do you think it promotes financial inclusion?
Well, there's lots of parts of the world, and there are billions of people in the world who don't have any access to bank accounts, they don't have a way to save. So just imagine if you're in a high inflation country. Your money, if you hold on to cash, it's going to get less valuable day by day. If you're rich, you can find a way to get it out of the country. You can hold dollars or euros. You might buy a car. That's not going to depreciate. But if you're poor, you can't really have a good way to save. You might wear a gold necklace around your neck. You might stash $100 bills under your mattress. These are not great ways to save. So one thing that generally digital money can allow people to do is if they just have a mobile phone, they can access international financial markets. They could buy a Bitcoin. Once they have a Bitcoin, they could use that to buy anything else in the world. They could buy dollars, they could buy euros. They could do all that without even having a bank account. It also helps some of the world's poorest people move money. Remittances can be quite expensive. If you're working 80 hours a week as a domestic helper in one country and trying to send money home to feed your children, you don't want hours of that work to go to fees. And so one thing that better and faster and cheaper international money movements can do is allow people to get their money home without paying a lot of fees.
Tell me about a couple of startups that have caught your eye that are using Bitcoin.
Well, so there are a lot of people entering the remittance space, people trying to allow international payments. So for example, if you're an e-commerce firm in the United States, you may not accept international credit cards. You might wonder why. Well, there's a high rate of fraud from international payments, and so you might actually lose your ability to accept credit card payments at all if you have too high a level of fraud. So you'll just say, forget it, I won't accept money. Somebody international that just can't buy my goods. So if you accept Bitcoin using a startup like BitPay, which allows people to use Bitcoin to pay and let the merchants get paid in dollars or whatever their local currency is, you can let people from all over the world access your e-commerce site, because when you send a Bitcoin, it's done. There's no fraud, there's no chargeback. You've got the money right there, and so the merchant knows they've got their money. And the consumer says, well, okay, I don't have a chance to go complain to a credit card company if I don't like my product, but this is the only way I can buy this product, and they're willing to take that risk.
Susan, thank you so much for stopping by the Hub Culture Pavilion here in Davos, and I'm Edie Rush.
So you'll notice that I accessorize by wearing exactly the same jacket. And if I could get Joe to come up, please, and also Jordan, my guests here. And I would like, as they're coming up, I'd like to take a brief survey. Who here has used a digital currency like Bitcoin to buy something? And who is a member of a loyalty points club? So almost everybody's done something. Okay. I'd like to introduce these guys. I'm really pleased now to be joined by Joe Lubin. He's the co-founder, one of the co-founders of Ethereum, which is, in fact, I just learned, the second most successful crowd-funded project
Does this work?
ever.
It's working?
And when I get you to introduce yourself, I'd like you to tell me what the most interesting thing you've done with the virtual currency is,
Sure,
that you can talk about. And then we're also going to hear from Jordan McLeod. Really pleased to have you as well.
Good to see you.
Author, and also one of the co-founders of Cornerstone Consulting. So introduce yourself with something that you've done interesting with virtual currencies that you're pleased to share with us.
Sure. Joseph Lubin, co-founder of a project called Ethereum, which is an open source decentralized application platform. It's based in Switzerland. It's a nonprofit project. The most interesting thing I've done with cryptocurrency is with the Bitcoin currency, I pay a whole bunch of my employees on a regular basis.
And they're happy to be paid.
Ecstatic, yeah.
Okay, great. Thank you. Jordan, what about you?
Jordan McLeod, based in Boston, author of New Currency. Have a consulting firm based in London called Cornerstone Global Associates, and we have approximately 35 consultants, about 10 of which are in the new economic space, looking at digital currencies and the future of money. And I'm also a founder of a startup called Stru, which is a decentralized file system and next generation banking.
Okay.
as well.
So I'd like to use, when I was at Bloomberg TV, there was a great old adage which was to speak to dopes and pros at the same time. Chris, I don't know if they still say that.
No.
Okay, well the idea is we're going to try to speak without jargon. We're going to try to speak using the same words that we might speak to intelligent teenagers, because if I can understand it, then it's okay.
She's talking to us.
So I'd like to start out, first of all, by just explaining have you guys tell me where you think we are in the evolution of money.
Yeah, I think this is just this year in particular is going to be a fascinating year. I think we spoke 3 years ago at this conference, and Bitcoin was just emerging, and the way that the 2.0 technologies have emerged with Ethereum and others, it's fascinating. But I think that we're in a space right now where China is looking to get inclusion into the special drawing rights at the IMF, and the horizon for the dollar as the global reserve currency is really near the end. And whether it's this year or in 5 years, it's within the next few years that we can expect that. We'll be moving to a basket of currencies for global trade, and I think that's going to open up a lot of space for digital currencies like Ethereum, like Bitcoin, and also like the VAN to really to fill in that void. And so it's going to be it's going to become a mainstream issue really soon.
Do you agree with that, Joe?
Absolutely. I was in the financial world, conventional financial world, for quite a while, and I got depressed and disturbed and withdrew from that world for a while because I felt like there was going to be a cascading collapse of systems that were out of balance. And when the Bitcoin came along, I was like, oh my God, there may be a way out of this. We may be able to build a set of technologies, a decentralized, new emerging economy that could cause potentially tremendous growth and maybe absorb some of the difficulties that we're going to have in terms of unemployment and financial issues.
How does Bitcoin or how do decentralized currencies help to address those issues?
I think a decentralized economy based on peer-to-peer networks and cryptographic tokens can become incredibly fluid. It can lead to an incredibly fast-moving, dynamic economy. The traditional economy has enormous frictions in it, and the frictions are taken advantage of by centralized entities. And so a decentralized economy can disintermediate centralized entities who, in my opinion, extract more value from a lot of transactions than they add. And essentially, if you want to achieve efficient price discovery on intermediation, and we need intermediation, there's lots of value in that, but we should price it correctly, and the best way to price it correctly is in a fluid, decentralized infrastructure.
What do you think that's going to look like, this fluid, decentralized structure?
I think it's a fascinating, it opens up enormous legal questions, geopolitical questions, and how that gets managed. A fully automated system, and how that's handled. How it looks like, I think it's probably 10 years away at least, and there's so many problems to solve. I believe in between there and now, it's really difficult to say. But I think that essentially we're moving towards a global culture, a global state, if you will, but I don't think it looks like the state that we have today with highly bureaucratic systems. Something much more fluid and efficient and multi-valued in terms of no one single monoculture. And
can I jump in on that? So the way centralized economies work is with external de jure regulation, basically. It's regulation by laws and regulators and ultimately force.
You mean military force?
Police force, military force, absolutely. Bitcoin, the technology, was born with regulation baked into it. Regulation in the form of mathematics, regulation in the form of traceability. Ethereum, a platform which will be released in 4 to 8 weeks, guys, something like that. It will be born with regulation baked in. We are building community formation and management systems, triple entry accounting systems, games, and all of this stuff will be able to have, all these decentralized applications will be able to have regulatory rules built into code. And so a regulator's job will really be like watching the green light on applications of companies or regions, sectors, countries that they care about, making sure that the code just works the way it's supposed to work, and that's what software does. So it's going to change things radically. Audits are going to take place in real time. Risk metrics will take place in real time.
And what's been the reaction from the regulators to what you're building?
Regulators are unaware of Ethereum at this point, as
Okay.
far as I know.
Because I was actually here in this room last night for another event on fintech, and there was a representative from the Bank of England sitting right there where you're sitting, and she said, the Bank of England is never going to accept Bitcoin, and ever. And then there was a sort of rise, a rise of laughter, and people said, well, you just wait and see. So do you think that's right?
I think the Bank of England may never accept it, and
Right.
I don't think it matters.
Okay.
I think, well, I talk to big companies in finance, banking, telecommunications. They're all interested. They all have disruption forces inside them. One big bank has a lab in Dublin that knows about as much as we know about Ethereum, and they're building applications. It's a huge American bank. They asked me how to integrate these decentralized technologies, especially Ethereum, with their existing 30-year-old layered legacy systems. And there may be some tiny way to do that, but ultimately what they have to realize is, okay, you've got your clients, your comfortable clients, and that's a cash cow that you're going to be able to milk for a decade or 2 decades. But you've got 14-year-olds and 21-year-olds who are going to expect to custody their own tokens of value. You'll still be able to use your brand and build businesses and services, but you're going to have to change the way you do banking. And so you're going to have to build a parallel system.
You know, I think the Bank of England, to their credit, they've gotten out of the way, and I think they've encouraged the innovation, and that's been a good thing. You know, and when she says that it will never, you know, Bitcoin will never be a part of it, you know, I think that Bitcoin is an open source solution that everything that the central bank does is capable of being outsourced to an algorithm eventually, and it will absolutely, I think it will absolutely be something like Bitcoin, maybe a 3.0, 4.0 version, where it's absolutely possible to replicate the central bank more effectively through algorithms. And you know, you know, the issues that you have to deal with, whether it's price stability, having a macro concept of the supply and demand for money and how that's evolving, how that's fluid. If you have aggregate the data, then it's possible to do that. And so I think she may underestimate what's possible.
So I'm interested in how this world is going to look, and I don't know. I always like to refer to science fiction, but has anybody read Neil Stephenson's books out here, Snow Crash or any of those? So he sets out this world in which basically people live in franchises, and they're sort of country franchises, and each one of those franchises might be using a different version of its currency. And I'm wondering, and these franchises can be very small. They can be the size of a neighborhood. They could be the size of a state. They might be just an island. And I'm wondering if that's the world. I'm trying to picture this world in which we're moving into. Is that what it's going to look like? If I live in the state of California, there might be 10 different currencies which I could use as I move around. How's it going to look?
I personally think it's going to, you know, the way that John Maynard Keynes spoke about it and solving the economic problem. I think that's where we're headed. And it'll be irrelevant. You know, I think that money will become a global phenomenon that actually helps to integrate global society. I think that's one of the core cultural functions of money is to integrate a people, And the inherent digital nature of technology is global, and I think when we figure that out, it will be extremely integrative for the world.
What thoughts from you?
So I think currencies, tokens of value, are about to undergo a qualitative shift in that they will become very granular. There will be tokens for everything. We're building token issuance and management systems in addition to our native token Ether. We're building community formation and management systems. You can use voting systems, threaded discussion groups, token issuance to create groups that care about something, create projects that focus on an activity, create blockchain-based companies. You can issue a token. The token can have rights of governance, dividend rights, and you can basically run an organization on the blockchain. If that organization wants to have a meat space footprint, then it can register also as a state registered entity. But Vinay Gupta is going to have his own coin soon. We've got somebody who's putting together a little interface so that people can come on and issue their own coins. Vitalik Buterin, the inventor of our project Ethereum, if he issued a coin that gave rights to, say, a 10% discount on his future ventures, I would buy a lot of those coins.
So I've heard, in fact, I think I've heard Stan describe the kind of the future of currencies in terms of like if this was filled with different sized pebbles. So you might have some pebbles which are quite large. Those could be the traditional fiat currencies, the dollar, the euro, the yen. And then we might also have loyalty points. Those could be other sort of types of currencies. And then you might have lots of different little bits, sort of cryptocurrencies, digital currencies, which might be the sort of grains of sand.
Sure.
Is that a good analogy? Is there a different way you'd look at money?
Yeah, well, one of the reasons for Ethereum is to make it really easy to issue tokens to be used for anything. When people were starting to make those altcoins, alts of Bitcoin, it took weeks to figure out how to use the Bitcoin code and change some parameters and make it all work, and then incentivize a whole bunch of processors or miners just to stand up your tiny little variation of Bitcoin that has 2.5-minute block times instead of 10-minute block times. On Ethereum, you get all of the security baked in, and it basically becomes a software development project. If you want to build something, if you want to decentralize an industry, all you need is normal software developers, because Ethereum takes care of everything else.
So, I mean, one way you have to look at money, you have to look at the arbitrary power, and decentralized applications see central banks as an arbitrary system, a centralized system, and the way that you control the money supply, the way you control interest rates is entirely arbitrary. I mean, from that point of view. And the thing about digital currencies is they haven't solved that problem. What you're talking about is what's called math-based currencies. So there's actually an arbitrary number of currencies that issued over an arbitrary amount of time and to an arbitrary people. And so unless you're able to solve the price stability problem in digital currencies, you're going to have increasing fragmentation of the currencies. If you can maintain price stability in the long term, then it becomes irrelevant, and it really just money becomes something that over time it really doesn't matter who's creating it, and I think it will eventually evolve into one system.
So I think one of the biggest problems economists that attempt to control companies or economies have is a lag in reception of data.
Definitely.
And bad data.
Definitely.
Okay.
Bad models.
Bad manipulated data, companies are not telling the truth a lot of the time. A lot of economic data is maybe not as correct as it could be. If you build a real-time decentralized economy, you can get real-time data on absolutely everything that's happening. You can actually potentially achieve the holy grail of matching the monetary base to the amount of transactions, the velocity of
In real time.
money in the country.
Definitely.
Yep.
Any questions? What thoughts from the audience on what you're hearing? Yeah, back there.
Yeah.
I think I heard you right. You called an end to the US dollar as a reserve currency once
Yeah, sure. China is the second largest economy in the world, is aggressively pursuing membership in the special drawing rights at the IMF. That could happen this year. The review begins in May, and the formal process happens in November. Germany went a couple of weeks ago. Germany went on and endorsed the Chinese inclusion in the SDR, what we're looking at potentially happening is a movement towards a complete revision of the SDR. Right now, it's essentially the yen, the pound, the US dollar, and the euro, and really realigning that with the G20, and that becoming a much more functional basket for central banks to begin to divest their US dollar reserves.
So, I mean, there's the function, and I apologize because this is not directly linked to Ethereum, but on this US dollar question,
Sure.
there's the function of a reserve currency where that reserve currency is held by central banks, and
Correct.
certainly the SDR plays a role there.
Yeah.
But there's also the notion of it being the primary means of exchange and the numeraire within the global economy.
Yes.
And given the unsuitability of the euro, given its unintegrated capital markets, given the closed capital account of China, I find it a little bit doubtful that we could really expect a change to this fairly resilient system in such a short timeline.
Well, I question what you just said about being a resilient system. The U.S. economy right now, the GDP, when you factor in Social Security, the debt to GDP ratio is 211%. It's completely unsustainable. It's higher than Greece. When it comes to the capital accounts of China, they're certainly moving in that direction. And so, essentially what you're talking about is the petrodollar, where the Saudis go, and does the SDR have a functional capacity for pricing? And we just saw, several, the Ukraine bailout, Greece bailout are being priced in SDR. There's a movement towards a basket of currencies for pricing. It's difficult to say when, but we're already seeing a decline in global usage of the dollar. It's moved from about 75% to 65%, now down to about 60%. And with the Shanghai Gold Exchange, they are looking at pricing. They just shifted to pricing in gold in the yuan, and the way that that's structured, it's completely devoid of paper gold contracts. So at any moment they could severely disrupt that whole industry because of the ratio of paper gold to physical metal is probably 20 to 1 or higher.
Yeah. China's opening up. They're accumulating enormous amounts of gold. They're creating swap agreements with as many countries as they can. The US dollar, or the US has basically exported inflation for several decades. They've traded paper for goods and services as much as possible. And things change in nonlinear ways, so things can look very, very smooth. The US dollar can look like the safe haven until something happens and somebody dumps too many treasuries and some political event causes some uncertainty.
Jason.
Hi, I'm sympathetic to that view, though, and I realize that China's opening the capital account, but the one thing that you would not be seeing if this were true, and I'm curious your view, is you look at the trade-weighted dollar, it's up 25-30% for the last 6 months. When you look at how synchronized global easiness, the ECB printing $1 trillion, you've got Japan, its balance sheet is now about 60% of its GDP. Now with the U.S. now tapering, or at the end of tapering, and now at the cusp of rising interest rates, basically the mix of that means that treasury yields go higher, and you see outflows in a lot of other countries, and they're all buying dollar-denominated, higher-yielding, instruments. Look, this might go on for 18 months, it might go on longer. I guess it's your view of the economic recovery of the ECB, but I mean that's definitely a trend that would run counter to what you're saying.
Well, absolutely. And I think that right now what you see, you have approximately $9 trillion worth of emerging market debt priced in dollars. So there's an enormous demand globally for dollars. And that demand is based on the assumption of the US dollar being functioning in that capacity. If that were to change, then, and really became apparent that the debt of the United States was as high as it is, then, that perception could change very quickly. And it's really difficult to say. I mean, what's happening behind the scenes, it's a very opaque process at the IMF and what's happening. But, I think that the fact that it's going up now is really timed with the euro. And you talked about synchronization. It's unfortunate that the euro didn't do this a year and a half ago to synchronize it better. But effectively, there's a race to the bottom globally with currencies, and the dollar's getting hurt the most. Or the U.S. economy will get hurt the most with a strong dollar. So.
This is Wei from University of Birmingham. My question is for the perspective of decentralized systems. Last year in a Bitcoin conference, the CTO of Ethereum announced that there are probably an end of the lawyers. And I'm going to talk with my lawyers how you're going to die. But responded like the Bitcoin or the decentralized system could be a solution to the assets, but it never be a solution to the tort issues. For example, if I've been murdered in the hotel, I hope I wouldn't. But in that case, Bitcoin or the decentralized system wouldn't help me to get resolved or to find a lawyer. So that responses makes me confused. So could you give me an explanation from your perspectives on the border application of the decentralized system? Thank you.
Sorry. I only heard part of that. I heard something about lawyers and things not going well for them. So maybe I'll just answer that part. I think a lot of professions will change. I think lawyers will be able to do more creative work. I think lawyers will be able to structure contracts by moving puzzle pieces around. Puzzle pieces will be clauses. You'll be able to type in names and numbers. These contracts that lawyers or even business managers are able to make will be self-enforcing contracts. So there will be less need for a judicial system.
Did that answer your question? Do you have anything else to add?
I assume the answer is there is less dependence on the traditional system, but the traditional
Sorry, can you turn up the
systems-
volume a tiny bit?
Sure. I think the answer was about the way we'll decrease the reliance on the current systems, but still the current systems will play a major role in some other perspectives. I think I understood it right. Thank you.
Thank you.
Good morning, Mohammed. So Joseph, I had the pleasure of speaking with you Ethereum a couple times, and I think the one major thing about Ethereum is smart contracts, which, as you say, are self-enforcing contracts. So it's incurring regulation into the way things work. There is one thing which concerns me about the Bitcoin decentralized community, though, and that's pushing for full decentralization. You talked about rents, about banks charging a lot for the current system, which is due to the technical debt we've accumulated. But surely, wouldn't it make more sense for a bank to just build their own blockchain, reap the efficiencies they gain, make more profit, let go of the back office stuff, and just operate a system where they have still full control over the monetary mechanisms and get the benefits of consensus they can use in a blockchain?
Yes, if I were running a bank, it would make perfect sense to do that. The Federal Reserve in the United States is looking at building a Fed chain. I've spent 3 days at Chicago FRB talking to them about that, and they've got a bigger effort going on now. I do talk to banks, and they are interested in saving money, or making their clients happy, and keep maintaining control. So I'm happy to help banks move in that direction if they want to set up a private network for some of their business processes. They're very interested in ID, persona, and reputation, so that's going to be an early solution that they go after really hard. I'm happy to help banks set up a semi-private network if they want, so that they reduce the cost of transmitting tokens of value, whether it's tokens representing US dollars or bonds or stocks. Ultimately, the inevitable solution is one that saves everybody the most money or makes everybody the most money, and I think that's a fully decentralized public solution. I think there will be private and semi-private networks that are talking to or staking hashed data, like digested up data on the public blockchain. But I love the fact that banks are excited about this stuff, and if they're taking baby steps in that direction, just I'm happy to help them get their heads around these ideas, and if they go beyond that, then great.
Hi, Jeremy Bonney from Coindesk. Another question for Joseph. What are the overarching goals of Ethereum, and how will you quantify their success?
What are the overarching goals of Ethereum? To build an infrastructure for global economic and social systems that is decentralized, fluid, enables pop-up solutions just as efficient as we can imagine it. I don't know how we measure that yet.
Hello, good morning. Marcus Krebs. I've got a question particular, I think, for Jordan. Looking forward a little bit, 20, 30 years down the line, what do you think is the future of the typical banking business or banking model going to look like, both for retail banking, bank branches in particular, ATMs, and then also for maybe more commercial type wholesale banking activities, thinking that companies might be doing more B2B and cutting out all the intermediate activities banks typically have and also makes quite a bit of money. Thank you.
Sure. I think it looks a lot like Ethereum combined with applications like Simple. I think millennials and the way that they want to, you have an entire generation that wants to disrupt the banking space. They love mobile technology and really simple, easy to use apps that on the front end empower them to manage their money, to budget, to connect with everybody through social networking where they own their data. And they have a feeling that they are co-creating a system as opposed to a system being provided for them that is really out of their hands. And I think there's a lot of decentralization in there, and I think it's absolutely global at that point as well, globally regulated, and really to do that, there's obviously some economic questions that have to be resolved as well. But I think it's within the potential of a decentralized digital platform to do that. And you want to answer that as well? That's right up your alley. Yeah. Okay. Sure.
Other questions? Yeah.
Yeah, I just wondered how you think gold fits in, given that the Chinese are moving towards a gold-backed currency and transactions, and fiat currencies are obviously very problematic.
Yeah.
How does gold fit into this whole picture?
Well, the IMF's talking about including gold within the basket. There's certainly, I think that there's a real potential for that to happen. Certainly the Chinese and the BRIC countries are looking at gold as reinforcing their fiat currencies as well. And if we can expect turbulence certainly through this process of, the central bank in China is obviously, they've been advocating for a basket of currencies for global trade for some time and moving away from any single nation having that power. And I think they look to gold as being a real anchor for that to happen. I think that the price, Alan Greenspan recently spoke about him feeling that, gold will be measurably higher in a few years. And when I really think it's really a matter of when the Chinese want it to happen. I think that they've been able to buy the price at an extremely low level with the cooperation from the West, so they can get up to relatively equivalent ratios for gold holdings to GDP. And when that happens, I think we can expect gold to triple to 10x, simply because the amount of paper gold, I just don't think that's a sustainable system as well. So it's certainly becoming a much more important, I think, intermediary step for stabilizing the economy.
Exactly. So markets today are somewhat manipulable if markets move to a decentralized infrastructure that is math-based and uses strong cryptography for everything. Things will actually be more in register. The amount of gold in the world today is much larger than the actual amount of gold in the world. There's an enormous amount of paper gold, and paper gold is being used by entities, by certain actors to manipulate the price of the metal.
Mm-hmm. We're going to have to leave it there. Thank you very much to Joseph and to Jordan for joining me here. Thanks very much to our involved audience. Back to Stan or over to Jesse? Okay, so Jesse, if you'd like to come up for your session, and I'll let you introduce your guests.
Excellent.
Thank you very much.